What's up, YouTube? So, unless you have been living on a rock for the past couple of weeks, you've probably noticed that Donald Trump from the USA imposed tariffs on almost all countries, ranging from 10 to 50%. Coming out on April 3rd, he came with his list of reciprocal tariffs. This was a picture taking, listing all countries with the tariff range. You could see China retaliated, imposed 34% tariffs on the USA, starting what people fear to be the trade war. Um, then Trump reacted again yesterday, raising tariffs again, bringing it to 104%. And then just in today, China hits back, raising tariffs again to make it now up to 84%. Same goes for the European Union. They approved their first set of tariffs on US imports today. So, what is happening, guys? As you can see, the whole world is a mess right now. Financial markets are going down, um, mostly because of the tariffs. The S&P 500 is in a bear market already. We're going to look at it in just a moment. But we just saw an immense stuff happening in the world with tariffs coming from this country, coming to that country. And then you might ask yourself, what is going on? What is happening? And what should I be doing? Well, to look at why this is happening, we're going to look at the theory to explain what's all behind this. Just a disclaimer: I'm not 100% sure that this is the truth. Just telling you what I think that might be happening. I'm telling you just what I think might be the truth. So we go a little bit back to the beginning of this year, and the facts are this, and this is the theory, and I'm going to explain it all to you guys. These are the facts. The U.S. has to refinance $7 trillion in debt this year. As you all know, the U.S. is the country in the world with the highest national debt, currently ranging more than $36 trillion. Mind you, that's not billion dollars, that's $1 trillion. If the USA was a company, it would already been bankrupt ages and ages ago. But because it's a country, it keeps just going on. And we all know if you have huge debts, then higher interest rates make that more expensive. So what you usually want is a lower interest rate. And that's what happened. Trump urged the Fed chairman Powell to lower interest rates. Powell was the chairman of the Fed, the Federal Reserve. But as far as right now, that didn't happen yet. And Powell said earlier that he didn't do that because he said that the Fed is an independent institution and the government can't just tell the Fed what to do. So, right now we know that Powell is not planning to cut rates yet, but we know that if the markets are going to crash further and a recession is looming, Powell might be under more pressure, way more pressure to lower the rates. Okay, those are the facts. And now the theory. So the theory is that Trump is deliberately imposing tariffs on the markets, imposing tariffs on countries, to cause for more uncertainty, to cause for more fear in the markets. What do these tariffs cost? Now, uncertainty, of course, crash in asset prices, and so making sure there's a higher chance of a recession. The US and, of course, most nations want to avoid a recession. They don't have good memories of the last one from 08, 09, 07, 08. And they are hoping that the looming of a recession, the higher chance of a recession, will force Paul or pressure Paul to lower interest rates. And therefore, it will be cheaper to refinancing the debt. Now, of course, I don't know for certain if this is true or not, but this is a theory that has been going on for the internet for a couple of days now. People say that this is the reasoning behind Trump's aggressive way in approaching the markets and approaching other nations, because he wants to refinance the debt because it's just going extremely out of hand. Um, like I said, I'm just giving you the theory here. I'm not for sure if this is true, but I think there's a high chance of this being true. Otherwise, it will be plain stupid to just like crash the markets for nothing and um, make yourself look really bad, causing allies to drift away further. Okay, look at the markets. We're going to look at the markets right now. As we can see, the top for the S&P 500 has been over 6,100 points. It's currently ranging just over 5,000 points, and the lowest point was 4,800 something. So the S&P 500 was intraday In a bear market, over 21%, currently not anymore. We're currently down just over a little over 18%. But we don't know if this is the bottom yet or this is the end yet. Because if you look at the structure, the market structure is looking pretty weak. We see here lower low, lower high. We're starting to make a lower low, it seems, but we're not sure if the low is already in yet. But to be bullish again, we need to break at least this level of around 5,700, 5,800 points and make a higher high here. So that would look something like this. Already made this like wave, then we could print a low here, going back up, and then we print a higher low here, and then from that moment we can continue to go up. Um, but that has not happened yet, and we don't know what the coming days will bring. Let's look at the Nasdaq for a minute. Almost the same structure, of course: lower low, lower high, lower low. We need to form lows here as well. And the Nasdaq is down a little more than the S&P 500. It's of course more volatile because of all the tech stocks. Yes, 25%. Um, so for sure in a bear market, because a bear market is when the prices are down 20%. Could it go down lower? Of course, that's a question you might ask yourself. What will happen now? Can it go down lower? Of course, it can. If countries keep raising rates, keep installing the tariffs to other countries, we might see a market that will go lower. The bottom will probably be in when the markets don't react anymore. If the coming days all countries come with, oh, I oppose this tariff, I oppose that tariff, and the market doesn't really respond anymore, at that point it's safe to say that the bottom is almost in. But we can of course see that a lot of stocks already been going down for a really big time. Yeah, so is the bottom in yet? We don't know, of course. We don't know for sure. But we have some indications we are, some indications we are not. One of the biggest indications for a bottom is that the fix is really high, and the fix is the volatility index. And usually when the fix is above 40 points, that means that the bottom is in or up, or we are close to the bottom. Now we see like a few days ago on Monday 7 April, was also called in the media Black Monday. We saw that the fix was a little over 60. It's currently over 50, and yesterday it was 36 at the lowest. So the fix is really high. That means there's a lot of volatility in the markets, a lot of fear, uncertainty, and doubt in the markets. So that means we're probably near the bottom. I don't think we had it yet, but who knows? You never know. Of course, with other signs that we're not yet at the bottom. We're printing lower highs, lower lows on the S&P 500 and the Nasdaq, as I just showed you. We didn't form a bottom yet or higher low yet on on the on the chart, so we have no reason to believe that the markets have bottomed. And of course, there's still a lot of uncertainty. We don't know what's going to happen. We don't know what countries are going to retaliate next. Luckily, we already saw that a lot of countries are talking about like, hey, we want to negotiate. That is looking very good. But we are looking at a couple of scenarios here. One of the scenarios is, of course, that the countries will negotiate with Trump, negotiate with USA. In that case, the tariffs might disappear or they might be lowered, and then the markets can rally, possibly like a V-shaped recovery, like in C19 times. Um, Another option is that the tariffs will just go on altogether. Trump will just give up um, because a lot of people already are pressuring him to give up. Of course, that chance of happening is very small. And the worst situation is, of course, when Trump says, no, we're not going to negotiate anything. We're going to leave the tariffs as they are right now. There's no room to negotiate. I want the tariffs to be like this. Then the markets are obviously, not going to recover as quickly. Although, of course, they will recover in the long run. Why? Because good companies, strong companies will continue to deliver and will continue to stay very strongly over time. Even though the market conditions are pretty bad, even though stocks are going down, real strong companies will survive. um, because the market is always looking for a balance, always looking for balance. It doesn't like imbalances. So see, the world and the markets are looking for a balance right now, and maybe tariffs from one country to another country is like the new normal. Maybe all countries are just going to use some tariffs here and there, and if that's going to be the new normal, of course, I hope it is not. But if that's going to be the new normal, the markets, of course, will find some kind of balance over time. Might take a while, but they will find it over time. So to answer the last question, what am I doing currently? I already bought. Like I said, buying strong company, buying good companies is never a bad time, especially not with a fix above 40, even above 60 at its peak. There's a lot of fear in the markets. Not, not almost no greed in the markets. So I already bought. I think this is a great time to buy. Should you go all in yet? It's not a bad idea to always leave some cash left at the sides for further downside, as we never know if that's going to happen or not. But um, of course, this is not financial advice. I'm not saying you to do anything. Not financial advice or just a dude with the camera. Not even a camera, by the way, just some um, screen recovery software, recording software. Um, but this is what I should be doing. This is what I'm going to do. This is what I've done before. I bought in the bear markets in 2022, 2023. As we all know, stocks went down a lot. Bear S&P 500 was also in a bear market. Um, and I continue to buy good companies, even though when prices were going lower. So I believe that in 5 years, nobody will talk about the tariffs from 2025 anymore. Nobody will talk about these Trump tariffs anymore. Like we don't talk anymore about the tariffs from 2018 or C19 or the big crisis of 07, 08. We don't talk about that anymore. Just so far behind us. So in 5 years, nobody's going to remember this happened. So I think this is still a good time to buy. And that's it. Okay, leave in the comments, please, what companies you want me to research next. Like, comment, and subscribe. And until next time.